Welcome back to my channel. In today's video, we're going to talk about utilizing change in state of delivery and how to only take A+ setups with this concept. What is change in state of delivery? Change in state of delivery is when price flips from bearish order flow to bullish order flow, or bullish order flow to bearish order flow. Now take a second and pause the video. What would you do in this situation? Would you take a short for continuation down, or would you look long to take out this buy side liquidity? Post your answer in the comment. The first person to get it correct will get access to Rags to Riches, where you get to live trade and learn from me every single day, completely for free for 1 month. The correct answer is long, and here's why. Most traders are seeing this candle right here as an inside bar, so chances are they're looking to take out sell side liquidity. We have sell side liquidity right here. We have more sell side liquidity down here. Notice how price takes out the first sell side liquidity, but fails to reach the second sell side liquidity. Now the reason behind that is because of this bullish equilibrium block. Now you don't have to necessarily take the long off the very first entry of the formation of the bullish equilibrium block. Notice how price never gets a body close below this range. Therefore, this move down was only a liquidity grab to get a push higher up. So if you did say long, congratulations. Now there's two ways that you could have taken this trade based on the change in state of delivery. The first instance, you could have waited for this volume imbalance to get mitigated here. Now what does that mean? For a body close to close over the volume imbalance that was created, which we do so here on this candle. Notice how price then comes back into this equilibrium block range for another retest before expanding out to take out this buy side liquidity. The reason why shorts wouldn't have worked out here and you got confirmation on this following candle is because this was the last line of defense for sellers. So if you were a seller that took a short based off this inside bar continuation down, you absolutely had to defend this volume imbalance. And the fact is that buyers ended up mitigating it, signaled, hey, we're going to get continuation up. We don't have to necessarily take the first entry off of that. I prefer to actually wait till price pulls back into at least an equilibrium block range where we risk the equilibrium block candle to then take out buy side liquidity. Now let's dive into a live example. Looking at this chart currently, what do we see? We got displacement up, and now we are currently in a retracement phase. Now, ask yourself, where would you want to go long? Me personally, I wouldn't actually look to go long just yet. Now, the reason why is because we ended up getting the full body close below this most recent low, signaling what? A break of market structure. And we also broke this swing low here, which also signaled a break of structure now on the higher time frame. So because of that, I wouldn't actually look to go long just yet. I would rather wait for some form of confirmation to say, hey, now buyers are actually present. So looking here at the 4-hour time frame, what do we notice? Buyers are stepping in here at the discount range or 50% of this recent expansion range. Now, based on the 4-hour time frame, our first change of state of delivery would be a close over this bearish equilibrium block. Now, the reason behind that is because we know how equilibrium blocks work. Price will respect them. For an example, what did price do here? Price tested this equilibrium block, never got a body close below it, came back up, and we saw slight continuation up. Now, our job is not to predict price. Our job is to wait for price to signal a setup to us. So let's mark out this equilibrium block. Now let's wait patiently and see, are buyers present at 50% of this range or not? Notice how this candle then closes into the equilibrium block range. Now we need to wait for one more body close to signal the change in state of delivery. Notice how sellers are currently stepping into this range, but we are failing to displace back down. Now at this given point in time, we got our body close above this range. So based on the 4-hour time frame, the market is now signaling we are going to take out at least 4-hour buy side liquidity. Now, where is 4-hour buy side liquidity? So we have buy side liquidity at 17,033 and buy side liquidity at 17,057. Now we want to go down to a lower time frame to find an entry to take out this buy side liquidity now that we have confirmation that the 4-hour offered a change in state of delivery back into bullish price action. Now let's go down to the hourly time frame to find an entry to take out this 4-hour buy side liquidity. Because we displaced past this range and also got a body close below this fair value gap on the hourly time frame, I would look to take a retest off the 4-hour equilibrium block to take out the buy side liquidity at 17,033. So my entry would go exactly like this, with the stop loss below the most recent low on the hourly time frame. Now let's play this out. Notice how we get perfectly wicked in. Now the reason behind that is because of the hourly close. That's why it's so important to pay attention to multiple time frames. Notice how this hourly closed over this fair value gap. We got the first rejection here where we failed to see a body close over this range. Then we actually got the body close. That's why it's so important to wait for confirmation and not try to predict the market. Once you have confirmation, you are going to make guaranteed money in the market. Guaranteed money. Notice how we displaced past PT1 on the hourly time frame very aggressively. The reason behind that is because the change of state of delivery was offered on the 4-hour time frame. Now let's see if we hit this PT. And notice where sellers start to step in. These are A+ setups. Change in state of delivery is one of the most powerful concepts that you can utilize in your trading, but you have to be patient. There is no predicting the market. You have to react to the market. And then and only then will you make guaranteed money. If you found this video useful, make sure to drop a like, comment what you guys would like to learn next, and I'll see you guys in my next YouTube video.